There was definitely a negative tune to today's session, but nothing that I think is going to negatively impact the strategies that have been discussed on this channel over the last several weeks. As a matter of fact, I think the most economic of negative tunes that occurred today may actually help us. But first, let's start with the thing that is very negative, and that's what's going on in Afghanistan today. All of a sudden, we are losing American lives. This is a total tragedy, should not happen, and hopefully there will be repercussions for those who have done this. But of course, they died in the most cowardice of fashions through a suicide bomb. Apparently, there's another strike going on, bomb going on. This is unfortunate. We will see what happens with that. That definitely left a negative tint on the market and overall psychology today. But historically, these events have not had very much impact on the market. They tend to kind of shake things up briefly for a second. You look at similar, terrorist-like events. You saw the Black Lives Matter rallies of last year have no impact on the market. And you saw January 6th, a very, hostile and volatile moment having to do with this kind of thing, have no impact on the market. I believe this will similarly have no real impact on the market today. Maybe we can kind of attribute it to the red that occurred as the day went on. We started off in the green for the most part, particularly on the Dow. But it was just there. It was just there, lingering. Another thing that is lingering, we're expecting to hear from Powell tomorrow, get the first indications of how Jackson Hole is going to go, where rates are going to go. Not that they're going to increase rates, but are they going to take back tapering? Are they going to lessen their position in the bond market, meaning that there will be less demand for bonds, in particular treasuries, meaning the price of these treasuries has to go up, or it has to go down rather, in order to find new buyers, meaning that interest rates will then be caused to go up. There's just less buyers willing to buy debt and lend debt if you take out and taper the biggest player in that market. That's just the way it is. So it sounds like Dallas Kaplan, is not as focused on Delta damaging the economy. He's not seeing it like he thought he was going to see it. So he's not changing his view. There was a belief last week and earlier this week that the Fed might push out the taper another month because, Delta's affecting the economy. We've heard from several Fed members today, presidents, that's not going to have, they're sticking to their script, sticking to their gut. They haven't seen anything go on that's concerning, really, just in leisure and hospitality, but the economy remains strong. This kind of made the market weak. This with Afghanistan, not much positive. There's a wall of worry out there, as Tom Lee put it. And he put a very important notion out there. I subscribe to his newsletter that comes out every day, First Word, FS Insight. And the other day, I believe it was Tuesday, he put a very important piece of data on that letter, and it showed that institutions have been net raising cash for the last 5 weeks, and retail has been net raising cash for the last 3 weeks, the longest period, all of 2021. So it's safe to assume that there's that level of fear in the market. We're seeing it today with Afghanistan. There's been a whole lot of things to be fearful about. Rising Delta, Afghanistan, rates. Looks like there's a lot of cash on the sideline. If we are to get some good news, which I think the rollover of Delta will certainly be, and I believe was the propellant of the energy rally we'd seen this week, that will likely continue as it rolls over. If we're seeing some positive news like that, that cash that has been being raised for weeks, that is currently facing a wall of worry with markets at these current levels, will be put to work, meaning a rally is likely to ensue, yes, from these levels. And it's likely to be led by epicenter energy because that is the area that has been hit most the past several weeks, yet the market is all the way up at these levels, and most directly correlated with the fears that have occurred, particularly Delta. We can expect that will roll over Delta and energy stocks will rally and continue to rally. This has been a very short rally thus far. It being down today is nothing of a concern. This sector, energy stocks, has had a very strong rally up to this point. We've seen a pullback. It's basically had a very strong pullback at this point, and it hasn't been linear. There's been some chop here and there. It's a little chop today, not anything crazy. So we should remain steadfast. What's going to happen with rates, though? Is that going to affect energy? I think it's going to benefit energy. We know broadly there's a ton of liquidity out there on the market. There's a lot of money. The Fed has provided a lot of money, an increase to the money supply. As interest rates rise, it makes future cash flows more expensive and less desirable. Technology, and it makes energy shorter term, more immediate cash flows that aren't long-term cash flows. You don't need to wait for these cash flows. They're here today and right now. Makes them more attractive. So I expect rates to rise, or at least tapering to begin, and rates rising might be a secondary effect, and that to boost energy stocks. In addition to the supply-demand dynamics that are helping energy stocks, in addition to the sell-off that has occurred, that has left, as we've said, OIH $60 off where it should be given prior oil prices. These being two very strong factors, throwing in rates, throwing in additional inflation, throwing in the continued reopen of the United States and the rest of the world, you have a very, very, very bullish energy stock picture. I have not sold anything in this sector, and I'm remaining steadfast as we watch things occur. So that's the deal for today. That's the thinking. And until next time, peace out.